Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 5. And I also just want to make sure that the mic is on today, just because we had a little bit of glitch during episode 4 in the beginning there. Anyway, today I am going to continue to build upon everything that we've touched on so far this season. And as you probably remember, because I did mention this a couple of times, I actually don't really plan or structure too much about these episodes because I want this to be as live, as real time as we possibly can be. I do have some high level ideas in terms of the concepts, the mindsets, the strategies that I will go into with you. And at the same time, I always want to prioritize the questions that also come up from episode to episode to episode. And so as a result, because the last few days we were talking about the wheel of wealth, as well as the different income buckets, and also the S&P process after you've set a goal. And yesterday we talked about the 5 key ingredients for long-term financial success. And so today I kind of thought that because there's been a lot of questions that have come up here and there, and I've answered them directly to you guys via direct messaging. However, my training philosophy has always been if 3 or more people have the same or even just similar type of questions, I'm going to address it with everybody because chances are that means that more of you are probably wondering about the same thing. And so yesterday, I got a DM, I got a direct message saying that, you know what? I mean, I really like the idea of financial education and knowing a few more strategies. However, it seems very daunting and very overwhelming to learn multiple strategies. And do I really need multiple strategies? Or, I've seen other people, they just go out and they learn one strategy and they are applying it, and it seems to be working out okay. And so here is my response and my take on things. And again, you can choose to follow and believe what you want to follow. However, this is what I have seen over the last decade, or even including my personal experience, almost 2 decades now, and along with having mentored and trained a lot of people around the world. Because so many people, they tend to think that education, especially real estate investing strategies and education, it's only for beginners. And I just really want to stress that first thing first, we got to start to develop the growth mindset. And what that really means is that it never ends. Learning should never, ever end. Because as I mentioned, as an example, for example, doctors, dentists, surgeons, and nurses, these are the people that have very, very important jobs on a daily basis. How would you feel as a patient to find out that your doctors and your health professionals that are supposed to take care of you are not actually improving themselves on a regular basis? And to me, that is really just pure ego talking or laziness, to be honest. Now, coming back here, though, the thing about multiple strategies, first thing first, I also want to share with you is something that I learned from one of my mentors early on that really stayed with me. And this is what he said: your exit strategies in particular, your exit strategies, and I would argue at this point in my career, is your strategies, period. Okay. However, your exit strategies, more importantly, will determine how you make money and how much money you make. And I'm going to say that again. Your exit strategy determines how you make money and how much money you make. Because again, as mentioned, when times are good, anybody with some resources can probably buy something. And this is why I want to go into a quick, very brief 3 stages that most real estate investing deals go through. And the first one is acquisition. And obviously, during the acquisition stage, if you're an educated investor, this is where you find a deal. This is where you analyze, or my bad, I already explained that really you find different opportunities, or opportunities will find you either through networking or through other means, okay? And then you analyze the deal, and then you structure the deal. Whether or not you have the personal resources to take things on, there's still certain level of structuring that's involved. It just means that, is it easy to structure or is it a bit more complicated to structure? Meaning, usually, how many people do you have to involve in the deal financially speaking? Okay. And then once that's done, obviously, you pull the trigger and you go into the legal process, the conveyancing process, the funding process to complete your acquisition stage. And we're going to discuss the BRRRR process later on as well. However, that's not the whole point today, because when I discuss usually this middle part, usually it's what I call the cash flow state. However, this is also the value add stage at the same time. So it depends what part of the BRRRR process or what type of property you got yourself into in the first place. This is usually the acquisition, as you know, is the B right there. This is typically the renovate and then rent. And so that is the cash flow and value add process, maybe even the refi process. And then at the very end there, we have the exit. Okay. So we're going to go into, as I mentioned in future episodes, about really how to leverage the BRRRR process to your advantage. Because I've just seen so many people, funny enough, BRRRR became a strategy at some point, and it has never, ever been a strategy when you're financially educated, because it really isn't. And I don't know how else to say that at this point. Just remember that point for now, and we're going to come back and revisit it. Now, the whole point is your exit strategy will determine how you make money and how much money you make. And so, as I mentioned, your strategies, period, determine how you make money and how much money you make, because again, your exit basically is you sell or you hold for income, okay? Sell for a lump sum profit, or you hold for consistent streams of income. And from the acquisition perspective, of course, in this particular case, when you learn the different ways of creative financing, then you can also be making money here. It's just that, how are you feeding into, once again, the circle of wealth? Because every single deal has the potential to feed into all three different buckets at times, okay? At times. They happen at different stages during the process of a full deal transaction. So anybody that's got some resources can get into a deal. However, do they understand how to value add it? Do they value add it to the point where really you're maximizing your income if you decide to hold, or even if you decide to sell, commonly known as flips? Then that also plays a huge factor as well. And so with that said, though, your exit strategies determine how you make money and how much money you make. That's really one of the first things that I want to share with you, in addition to the growth mindset. The second thing that I really want to share with you is the fact that one thing that we know for sure is that change is the only constant. And so, again, a lot of us, especially in North America, and I'm pretty sure this is actually happening worldwide, because we also have a portfolio in the UK, and we're pretty much going through the same situation in that market as well. Interest rates are going up, values are kind of coming down a little, just because of what has been happening over the last few years. And clearly, inflation is skyrocketing in most developed countries, where the governments were printing money to subsidize people's living expenses during the pandemic. And so all of these economic factors that are coming into play still confirms the idea of change is the only constant. So what that really means is that right now, in this particular moment, you might think that one strategy is enough. And it might be. I'm not here to argue with you. However, what happens 6 months down the road, 1 year down the road, 2, 3, 5, 10 years down the road? Is that exit strategy still going to be the best way for your money to be making money for you? Frankly, I highly doubt it. And this is also why a lot of the times I keep mentioning this, and you probably noticed I got somebody commenting on this. The fact that I put on my glasses the last couple of days. I mean, I had laser eye surgery back in 2008, so I haven't worn glasses for the last 14 something years. These are strictly for anti-glare and blue light, just because during COVID, a lot of us got so used to staring at the computers. And plus, these days, really, we are on our devices a lot. And it becomes a little more difficult to see, actually, without proper lighting, without proper tools. And so the same thing goes for real estate investing, leveraging properties as the main asset class. I keep saying this, it doesn't matter where you go, you're going to see it, that real estate properties are like people. The older we get, the more problems we have, and the slower we perform. And so it is okay as people, in my opinion, because that's just the nature of life. However, when you are financially educated and inflation continues to go up, things will continue to cost a little bit more. It is not okay for your money to get lazier and lazier and lazier. And this is why it is crucial and essential to know multiple exit strategies, because you never know how the market's going to change, the kind of demand and supply for housing. For a while there, Airbnb or short-term rentals, it was what everybody talked about, just like everybody talked about multifamily or multi-unit residential investing over the last 2 years. Now, here's the thing, no one strategy is better or superior to another. I truly, firmly believe in that, because at all times, you gotta know multiple strategies to protect yourself. And now all of a sudden, midterm rentals is what people wanna do. And funny enough, in our curriculum, all these short-term and midterm rentals is what we call serviced accommodations. I want the phrase to sink in a little bit. It's called serviced accommodations. Funny enough, I didn't come up with this, and I'm very straight up with you guys. Things that are proprietary, I will share with you. They are proprietary. Things that I have learned, I will also share with you. There's no point in taking credit for something that somebody else came up with instead of me. And that's just it. Success leaves clues. You want to learn how to become more financially educated so that you can leverage real estate investing as your main vehicle. Then you follow and get trained by the people that focus on financial education, leveraging real estate investing. Or you can basically pick an asset class, and it's no different than maybe perhaps today you're an office worker, you're a sales manager, maybe you are an IT person, and you decide, you know what, I'm gonna become a heart surgeon tomorrow without any training. I know when I say stuff like that, you guys laugh. You laugh at the joke or even laugh at me. However, that is what we see. That is what I see all the freaking time. People think that they are able to just go and buy something and buy, rent, and parade. I guess it's that mentality that maybe I will gamble and maybe I will get lucky. And that's the thing. I don't know about you. I mean, I worked really darn hard for a while there, and getting lucky, it never truly happened. These days, I really do subscribe to the new definition of luck, and that is when preparation meets opportunities. It's when preparation meets opportunities. And what does that mean? The preparation that I've been doing is getting myself financially educated. Every strategy that I learn, I will apply it, so then I accumulate new lessons and new knowledge and new experiences so that it continues to build me up as the different building blocks that we all go into. And so in this particular situation, again, do I need multiple strategies? My biased opinion is you absolutely do need that, because you also don't know in terms of what government regulations will do that will affect populations. Because when we are real estate investors, here is the formula that we look at first and foremost. And the funny thing is, this actually is not just about real estate or real estate investing, because even on a personal level, it doesn't matter who you are, where you're from, nobody escapes this simple equation. is the fact that every person, even those that are still in the mom's belly and they're not born yet, the moment there is some sort of a government indication that they know you're having a baby, basically this equation already starts. If you don't understand what that means, maybe seek out a friend who is currently expecting a child, okay? There's revenue that they might be expecting. However, there's already expenses that they are incurring. Now, regardless of what happens, at the end of the day, we're going to get a number that's either in the positive or in the negative. So which side do you want to be on is completely up to you. And so this, once again, is the income statement commonly known. Okay, so it doesn't matter who you are, where you're from, what kind of business you want to run. This really is as simple as it gets. Clearly, when we get to the income properties modules, it's going to be a bit more complicated than that. However, this is also, if you've ever been to a business class, this is Business 101. After you've made your money, you've spent your money, do you want to be making a profit or do you want to be making losses? So why is that important when it comes to discussing multiple exit strategies? Well, it is in the sense that, again, do you think that today, let's say in 2023, certain strategies will work because the government is having, for example, new incentives to increase immigration population, which means it's great. So it's going to increase the population. What population means is it's going to drive housing demand, means for investors, we have renters, we have tenants, because a big chunk of revenue in our industry comes from rent. Sort of goes without saying, right? At the same time, though, remember, this is where the people portion comes in. And this is where the asset management portion comes in. And this is why also we don't believe in calling a specific course or training just property management, because property refers to the hard asset. However, really ultimately, property management really deals with the expensive column in an income statement, whereas the revenue component deals with tenants and renters. And so this is why we say that it is really tenant management and property management, or better yet, if you're growing your portfolio as a result, meaning you want to go beyond just one income property, then it's called portfolio management. Okay. And so in that case, anything that could work today, what about let's fast forward maybe 5 years? Do you think it's going to work? First of all. Second of all, even if it is still working, like I mentioned earlier, okay, in most markets, revenue rarely ever catches up as quickly. See, not my first language. And if I can do this, if I can invest in real estate and living in an English-speaking world and make it, everybody can. So anyways, coming back here. Revenue, the growth on revenue streams rarely catches up as quickly as the way expenses go up, which means over time, the potential for that number to drop and to get to the negatives, the prospects are very, very high. The chances are very high. And so again, once you're educated, then you actually have different ways of improving the performance, once again, through different exit strategies. And if you want to say, you know what, then I'll learn it then, sure. However, that is no different than people saying, you know what, I'm just going to live for today. I'm going to deal with whatever problem that comes up tomorrow. It's that same kind of thinking that probably is keeping you up at night and worrying about money and your current financial situation, or better yet, your retirement, how to support your children, school or extracurriculum, or all the other problems that you think you're having in life right now. We like to say, even though money is not the almighty, okay, it does solve a lot of things. And so if it's something that money can solve, you don't really have a problem. And like I mentioned before, my personal goal is to really help everybody, or as many people as I possibly can, for the rest of my life, to really look at money and go, I don't worry about that anymore. I don't worry about that anymore, because I remember what it was like for me to worry about it, pulling 80 hours a week at my jobs and watching it tear so many relationships apart, including my own parents. And so with that said, though, the funny thing about drawing this out for everybody, and it's all too real for me, is people tend to think that having a mentor, having an educator, or having some sort of education is strictly just for beginners. Once again, as I mentioned, no. If you have that mindset, this is probably not the right channel for you, to be honest, unless you are ready to learn and start to open up your mind about the different ways of looking at how money works, and as a result, how picking the right asset class and the vehicle that is real estate investing will work for you. Now, so many of the students that I have had the pleasure to work with over the last nearly decade now, more often than not, they were not newbies. Most of the times, these were the people that had worked really hard, saved up, and lived really frugally, acquired a few income properties, and then they're now completely stuck. How are they stuck? Number one, they're not able to scale anymore, meaning they're not able to increase their income level anymore through their portfolio. And yet they recognize the fact that their income actually from the portfolio is decreasing as much as they could be potentially building equity. Now, that is an interesting equation that I will go into with everybody, because I want everybody to actually see what it's like when people say, just hang on to it, hang on to it, hang on to it for 20, 30 years and wait for the big payday when the loan is completely paid down. And in this case, mortgages. And so first thing first, they are noticing that they're no longer able to scale. And number two, they are losing the income level that they have. Okay. And then number three, they also become tire landlords because they don't have processes and systems. Remember, one of the 5 key ingredients for long-term financial success. And all of a sudden, life starts to happen. Again, we all know their life is never going to go as planned, in a good way and in a bad way. It just depends on how you look at things at times. So my point here is the fact that all of a sudden they realize, oh my goodness, I've been working for 20 years of my life. I've been a landlord / investor or property collector for the last 10, 15 years now of my life. And I'm just exhausted. And all of a sudden it gets emotional and they become what we call tire landlords, or they become motivated sellers as a result. And so that equation just does not work. And over the years, I've also come across people that went, oh, wow, you know what? They call it BRRRR, but I've been doing this. And in the US, when I first learned it, they called it cash out refinance. When I learned it, it was called money in, money out, asset for free, and income for life. And these days, honestly, asset for free, probably really, really challenging in most North American markets now. And this is why we go into infills and development. And that's more of a high level strategy for more advanced investors. Again, I digress. We'll go there at some point. However, coming back here, though, is the fact that you need to make sure you don't get yourself into that scenario where you become a motivated seller because you don't have the fundamental understanding about how money works and you're just hoarding properties. And that's not going to work. So on that note, what I can promise is next week, we're going to take a look at what the opportunity costs are typically for somebody who just hoards properties and not able to scale because they refuse to actually learn multiple exit strategies. So on that note, I know this is the last episode from this week. We're going to go into the weekend now. And then next Monday, I will be back here with season 3, episode 6. On that note, I keep forgetting about this. I also want to take this opportunity to invite you to the monthly coffee chat that we have. And it typically happens on a Saturday at 11 a.m. Eastern time. So 9 a.m. Mountain time and 8 a.m. Pacific time. And it is a coffee chat because it's very casual. Usually we have a few experienced investors investors, and a lot of the times they are trainers and mentors from the Trust Your Talent Academy team. And we are going to be coming in and answer the questions that you have. So I'm going to post the Eventbrite link in the comments section below again, so that you can get yourselves registered and come join the conversation. Ask us your questions, okay? This is a no charge session. So get yourself registered and I'm going to see you there. And also next weekend, as I mentioned before, we are having a 2-day live workshop that I'm going to be teaching, and we're going to go over hard strategies and soft strategies, and I'm calling it Strategic Real Estate Investing Fundamentals. And clearly there is always going to be a lot of money mindset built into it as well. So check out the Eventbrite link, and I look forward to seeing you tomorrow at the coffee chat. And it'll be so exciting for me to meet some of you in person at the workshop. So have a great day. Have a great weekend, everybody. I will see you next time. Live well, everyone. Bye.